In my opinion, far too many new day traders come to this business with thoughts of getting rich quickly. That doesn't work, and this is why and where most of them quickly fail. I only use price action in my trading. I don't use any fancy indicators. Point, end of story. Before delving into this trading system and the techniques, it is important that we discuss a few things that I believe are critically important to making money day trading the ES futures. First of all, you should already have a basic understanding of what a futures contract is and how futures are traded. Secondly, this video is about learning how to trade from pure price action. You will not need to learn how to use any secret indicators or even look at more than one chart or screen at a time. You will find that all you need to trade profitably is one chart and the ability to draw trend lines and horizontal lines. You will not need anything else, as it will only distract you. I will not teach you how to get rich fast, but rather how to make a living trading this strategy. For charts and order entry, I recommend you to use NinjaTrader. You can trade directly from your charts with your orders right there. As a price action trader, you must learn to spot the trend and formations that consistently appear on your chart over and over, while also using independent analysis to determine when to enter and when to exit the market. The most important rule in trading price action is to be able to look at a chart and determine if the market is making higher highs and higher lows, and if so, understand that the market is in an uptrend. If the market is making lower highs and lower lows, then the market is currently in a downtrend. Understanding this is the key to all the rest. The market can actually do only one of three things, and your first job is to determine which of the three it is currently doing and then to act accordingly based on the rules that you will learn. The market can trend upwards, it can trend downwards, and it can trade in a trading range. The only indicator I believe in for chart trading is a 21-bar EMA. Most of your best entries will occur in a trend and during a pullback to the 21-bar EMA. One of the best ways to actually describe price action trading is to understand that prices and price movements create footprints of the trades that are made by all of the market participants as a whole. If you truly want to become a profitable trader, then you must learn to read the language of the charts so that you can understand what prices are doing. If you listen closely, prices will tell you what it is doing and where prices are most likely to go next. I recommend trading with only one chart, and preferably that is a 2000 tick chart. You will only trade with the trend, and you never counter trend trade until there has been a significant break of a major trend line. Even then, you should still be looking for a retest of the high or low before you even consider to counter the trend. You won't need any special indicators other than a 21-bar EMA, some trend lines, and some support and resistance lines. Anything more than this, and you will simply distract yourself from what you need to see. You want to ensure that you buy low and sell high. While this seems like common sense, buying high and selling low, or selling low and buying high, is why most traders lose money in the markets, and you don't want to be this trader. Prices are either trending or in a trading range. You must decide which one and trade the trend or range according to the rules you will learn. You will want to take second entries. You will learn more about second entries in this video. Your main objective is to locate these trades with at least 1-to-1 or preferably 1-to-2 risk-reward ratio. I know there are many scalpers looking for few ticks. It doesn't work for me, and I don't believe in anything less than 1-to-1 in trading. But that's only me. Ignore the news while trading, as it will not give you any clear direction as to where prices are going. Be aware of when major news will be released, because you can and will get whipsawed on most occasions. Okay, so let's talk about second entries now. The market moves in twos, and it does this over and over all day. When the market attempts to do something twice and fails, it will usually do the opposite. This is where second entries become important. These failed moves also create traps, which usually create rapid moves in the opposite direction. These are great profit opportunities for you to get your 1-to-2 risk-reward ratio. Your job is to determine the type of day as quickly as possible and then trade accordingly. On trend days, look to take all second entries with trend. On range days, look to fade every new high and low for the day and watch for double tops and double bottoms and fade them. While fading highs and lows on range days may seem like counter-trend trading, it is not. Fade or fading simply means you should enter in the opposite direction. Now remember this, never counter-trend trade during a trending market. Going against the trend is a losing strategy, and it is close to impossible to find consistency there. The best entries come just as the market trend seems to be failing and finally ending. The with trend entry looks like the last thing you would want to do, and this is when most of the weak hands are sucked into the wrong side of the market, just as it is making a low in a bull trend pull back or making a high in a bear trend pull back. You will be surprised to know how often this setup will fool even experienced traders. Think about it for a second. How many times have you watched a strong market making new highs and then suddenly it starts to struggle to move higher? It then makes a nice leg down before turning up again only to stall with a lower high. It looks like the trend is changing and the market is now looking very bearish. You tell yourself that now is the time to enter counter trend, so you set your orders and enter the market short, feeling certain that you have outsmarted everyone else and are getting in on a trend. Reversal with perfect timing. Sounds familiar? There are many gurus that teach as their main entry tool the old 1-2-3 top or bottom formation. That entry technique is designed to do one thing, and that's pick tops and bottoms, and 90% of the time those patterns fail and end up losers. I never trade like that, and I highly recommend you to forget this style of trading as soon as possible. In general, the 21 EMA will keep you on the right side of the market. Never trade against it unless it's a clear range, but I will discuss this in different video. You will always draw your trend line and trend channels. Always. Now, I will teach you the most kept secret in trading with trend lines. When prices breaks your trend line, that doesn't mean that the trend is reversing. Just the opposite. Even when you see a convincing break of a trend line, you will most always see prices attempt to test the previous high or low, so even a convincing break of a trend line should first have you looking for another with trend entry. Prices like to retest important highs and lows, so remind yourself of that every time you are considering a counter-trend trade. Once you get a convincing break of that all-important trend line, the general rule of thumb is that prices will try and do one of two things. You already know that prices will almost always try and retest the previous market high or low, but there are usually two different scenarios that you must watch for to occur. 1. Prices will either go on to make yet another new extreme before reversing, or 2, they could make a lower high in a failed retest. If prices go on to make a new extreme, you should see at least a two-legged correction after doing so, unless the trend is simply too strong and prices resume the original trend. On the other hand, if prices make a lower high in an uptrend or a higher low in a downtrend, then you should see at a minimum at least one more counter-trend leg. This will actually be a two-legged correction, but the pull back off the high or low point actually creates leg 1. That's about it for a general introduction for price action trading. In the next videos, I will discuss the second entries, traps, trend channels, and how to combine them all to one trading strategy that actually works with no fancy indicators or any mambo-jambo magics.